It's Monday, April 19th. This is The Street Live. I'm Katherine Ross, and I'm joined by Jim Cramer. Jim, we've got the Dow, the S&P, and the NASDAQ all down. So what are you watching in the markets today?
Well, I'm watching Tesla. I think that in many ways, Tesla has been the bellwether in that when Tesla goes up, the juices get it. You know, people get very excited. And what the Tesla declining means is that a lot of the EV plays that are so captivating people, a lot of the solar plays, the clean energy plays, everything is hinging on the stock. And it's got to come back or people are going to say that this move is too dangerous. And right now we've got crypto under assault. We've got Tesla under assault. And the buyers of these, they go on strike. And so I think that that given how important they are, you got to be very careful.
So let's talk about crypto specifically because we just recently saw this plunge over the weekend, Jim, and it's kind of based on a rumor, one that I have yet to verify, that the U.S. Treasury is planning to crack down on money laundering through Bitcoin. I mean, you own Bitcoin, Jim, so I'm wondering with this a little bit of a dip here, what you're looking at.
I sold a lot of Bitcoin to put a down payment on a house, on a country house with a lot of land, so I can go back to what I used to do, which is maybe raise some animals, get some horses, raise alfalfa and hay, and maybe sell the overage. But that was good for me. I mean, I bought it and I bought it right. And one of the things that I think is important is that I'm a big believer in taking profits. Now, people are religious about things. These are pieces of paper or pieces of metal or journal entries. And the excitement they've had for these, I think, is dreadful because that's how you lose money. The fact is that I can't lose money in Bitcoin because I've taken out enough that whatever happens, I'll still be fine. But in the meantime, I went to a bank, put the deposit down, and I feel great. You know, I just feel great. And I think that people who use these cryptocurrencies to buy things that are not ethereal, not non-fungible, which doesn't make a lot of sense to me, frankly, because everyone's offering anything and everything, and it's just stupid as wood. But I feel great because I was able to take that money and do something with it and still have some. And I know that Time Magazine is offering you can buy the subscriptions for everything, any crypto. I don't know. That seems like an interesting thing to buy Dogecoin for. But I just, look, I'm suspicious. And the way I deal with suspicion is to take my profits out and let the rest run.
Well, and Jim, I had an interesting conversation with Beeple that aired last week about non-fungible tokens. And he said something that Gary Vee had said to him, which is that non-fungible tokens might be in a 90s, similar to a 90s internet bubble, but that doesn't mean that we're going to stop using them, which I think is a good point to make at this point since we don't have any regulation in this space.
Well, remember, you don't get anything basically for owning it. You just don't. And that's my problem. I mean, if you own a Warhol and you sell it, you get money and the buyer gets something. If you own the Warhol and you do a non-fungible token of it, the buyer has nothing, but may have paid a fortune. Now you can say, well, the buyer has the ability to trade it to someone else. Well, I don't know. Is there a secondary market of someone who would pay $1 million for that? I mean, maybe. I mean, when I tried to buy the cover of Is God Dead, I mean, I was bidding $20,000. Suddenly the guy got it for $100,000. I think he could have gotten it for $22,000. But you know, that's the way it works.
It's definitely a space that we need to see mature a little bit. And there are certain elements that, for example, Beeple has some of his NFTs come with physical components. So it's definitely something to keep an eye on. And Jim, another thing that I want to keep an eye on right now is earnings season, because last week on Mad Money, you ran through some of the biggest earnings that we're going to get this week. And based on what we've already seen, because we've gotten earnings from companies such as Coca-Cola, which I want to get to in just a moment, but what's your first take on earnings season so far?
Well, I think the banks were terrific. Now, Wells Fargo is the only one that reacted, and that's just Wells Fargo is a special situation. J.P. Morgan, I thought it was a good quarter. No one seems to care. It's at 153. That's kind of where it was. Bank of America was fine. No one cared. Citi was good, and people did care because Citi is getting out of areas where it doesn't have to be in, and that's terrific. But in general, the banks were very, very good. And then Matt Boss had this retail conference. And I thought that was very important because almost everybody shined. Almost everybody. And that was very bullish. I am a huge believer that as long as interest rates we're in good shape. Now, I'm mindful that interest rates were at one point up today pretty significantly, and they're not anymore, which means to me that you could have this could be a turn day, provided that Tesla stops going down. Because Tesla is such an important stock to this market.
So, Jim, we spoke last week about Pepsi's earnings, and I want to take this opportunity to talk about Coca-Cola because this was one of the first earnings reports we've gotten so far this week. What stood out to you in this quarter?
Well, I think that they made a lot of money on premise, meaning that they made a lot of money at service Coke, and at McDonald's, at Chipotle. I was very, very impressed with what James Quincy did. And when I spoke with him, I'm kind of just in awe of how well they're doing with nothing working. And so you can imagine what could happen if people go back to restaurants. Now, a lot of the restaurants have gone under. And there's 150,000 restaurants have gone under. That's a lot of Coca-Cola customers. But the guys who won are big Coca-Cola customers. Like the McDonald's of the world. So I'm not giving up. I think it's good. I mean, we don't own it, but I think it's very good. 3% yield with a guy who's doing a great job.
And another company that we heard from this morning was Harley Davidson. They posted earnings, and you praised CEO Jochen Zeitz. So, Jim, I'm wondering.
I mean, this thing has been a disaster. And I think that he somehow cracked the code of how to get younger people in. This has been an older person's game. So I think he's doing something very right. He's very smart.
And what do you make of the stock based on your comments about the CEO?
I think it can go much higher. I mean, I don't know why it stops here. I mean, it's up 4. It could go much higher.
You made some more interesting comments on CNBC this morning, and referencing Alphabet, because you said that the chatter around breaking up Alphabet is just kind of muddying the water at this point, and your stop trading point was that you should buy this stock based on its earnings. But however, you think that it's gone up a little bit too much.
Exactly right. I mean, there's this idea that they can break it up into YouTube, into search, advertising, Google Cloud, Waymo, and it's ridiculous. I mean, so they don't all fit together, but that's okay. I mean, a lot of GE didn't fit together. A lot of the conglomerates don't fit together, and I'm not anti-conglomerate. I'm anti-bad conglomerate. So I think that Google's doing the right thing.
But do you think that the stock is run up too high where it is right now?
No, they've got great growth. They're doing really well. Remember, their principal advertisement was travel, and that's coming back really fast.
Well, and there's a bunch of analyst notes that I want to save for our Action Alerts Plus Daily Rundown show after this. So we're really going to dive deep into this stock today. But before we do that, Jim, I want to get to the Consumer Product Safety Commission warning people to not use Peloton treadmills with children or pets nearby. And you tweeted that you expect the shorts to come in here, but that you don't think that this will have an overall impact.
Well, right. I mean, I think that a lot of that is, if you looked at the video, it is so horrible that you have to believe that the stock down 9 is not a buy. Only 8% short, but is horrible. And I just think that it's not going to necessarily knock the thing off the market, but people are going to look at that video and they're going to say, I don't know, I like to have my kids work out with me or roll over and be there or whatever, but that's it. I mean, you're going to have to go into an isolation chamber if you're going to go into that, if you're going to use the Peloton.
Yeah, I definitely want to warn our viewers, if you haven't seen the video that was posted on social media, definitely there's a content warning there. It is difficult to watch. So, Jim, I want to get to what your advice would be for investors in Peloton who watched the video or maybe just heard about the video and are wondering, what's the approach?
I don't like to sell down 9, but you need to sell it. You need to sell it. This is very bad for sales. It's just bad. I mean, it's, no one's going to think that it's just kids. Everybody's going to think it's everything.
Yeah, I mean, I personally, Jim, just speaking from a personal note, and I think that you'd feel the same way. If I had a Peloton treadmill, I would definitely be thinking twice about having my puppy in the room,
Totally
just
right.
by using it.
Totally right. I would keep my dog out, and sometimes my dog's pretty inquisitive. But yeah, you got to lock him out. It's just too serious.
So, Jim, George Sherman, the CEO of GameStop currently, announced that he will be leaving on July 31st unless the successor is found sooner. And there's also this other story that is helping boost GME this morning, where Warren Kitty raised his stake and doubled down in the company rather than sell his options for a profit of over $7 million based on Friday's price.
Yeah, he's the opposite of me. God love him. Maybe he makes a fortune. I think that's somewhat reckless. I think he's taking a mental quarantine, but yeah, he's just out there, willing to bet on something, right? He's betting on. He's got some idea, doesn't he? Maybe. I don't know. I'm looking up Roaring Kitty to see what he says. He's been
very active on Twitter lately.
Oh, yeah?
Yeah, well, I follow him quite closely just because I'm always curious to see what his thoughts are. And it's interesting because he'll post videos and you kind of have to take context clues from those videos to understand, if GME's down, what his thoughts are around that. So it's definitely an interesting follow on Twitter.
Yeah, well, yeah, definitely. Keith Gill is his real name, right?
Yes.
He doubled down on Friday.
So, Jim, I'm wondering, based on this, I mean, obviously many investors, especially Reddit investors, follow him closely and believe in his thesis.
That's the way they work. They're single-issue players.
So do you think that this is enough to keep GME's positive momentum going?
I think it's bad that we finally got Cohen in a position where that Sherman has no power and Sherman's leaving. Because, for instance, they did this stock sale in order to be able to fix their balance sheet. And that was something that the Reddit guys were really against. You can blame it on Sherman and don't have to put it on Ryan, which is pretty interesting. Although the stock is up almost 800% this year and Sherman was the CEO. I mean, it wasn't like he wasn't the CEO. He was the CEO.
Well, and Jim, I want to end there because I want to head on over to our Action Alerts Plus Daily Rundown show. You have Matthew Boss, JP Morgan's retail analyst, on tonight. Want to dig into what you're curious about asking him, as well as Nike, Alphabet. I mean, there's just such a huge slew of topics that we still need to hit on.
I want the American Eagle Outfitters, I think, was the star. And I certainly want to talk about that. I want to know who was not the star. I think Gap had a really good presentation. We're going to find out who had a great presentation. I don't know. He'll tell us.
All right. And with that, we're heading over to our Action Alerts Plus Daily Rundown show on actionalertsplus.com. Come join us over there. I'm Katherine Ross, and we'll see you tomorrow.